Okay, again, good morning, everyone. My name is Karen Lee. I'm with the University of Arkansas at Pine Bluff. Um, I am going to be on the monitoring end of this meeting. Thus, I will be the one trying to make sure that as this meeting goes as smoothly as possible as far as the technical side. So here are a couple of house rules to start off. Please, everyone, unless you're presenting, mute and stay on mute until there's an open question time, and then you will be able to ask questions. If we find that there's a lot of interference, we will mute you. If I have to mute you and you get back on and there's some further disturbance, unfortunately, that would be your exit from the meeting. And then we would have to return that to you via recording. So please, we ask everyone to be mindful of the speakers and give them the opportunity to do their presentation. If you have questions during the meeting, you are free to put them in the chat box and then we will answer them accordingly. But we're just trying to make sure that we do the best meeting possible. At this point, I'm going to turn it over to Ms. Candy Williams. She's an extension associate here for the University of Arkansas at Pine Bluff. And again, thank everyone for coming.
Good morning, everyone. My name again is Candy Williams. I work for the Small Farm Program. My service area is Southwest Arkansas. I'm located on the Oklahoma, Louisiana, Texas borders. And we would like to go ahead and get started. Today's session will be on credit and financial management. We're running a couple of minutes behind, so I would like to turn it over to Ms. Clarissa Pace. Ms. Pace, could you please give a brief introduction and you can proceed from there.
Okay, I'm Clarissa Pace. I am CEO and owner of Shekinah Services LLC located in Monticello, Arkansas. I am a credit specialist, a tax professional, well actually all-round financial educator. So I own my own business. I've been in business for a little over 20 years in this area, and so it is a pleasure to be here with you all today, okay? Ask is to talk about credit and farmers and credit and building and give some COVID updates. I'm wondering, can I share my screen?
Yes, you can.
Okay, all right, let me pull that up. Let's get this up. Okay, can everybody see my screen?
Yes.
Okay, all right. Well, listen, it's a pleasure to be here. And as a presenter, I don't like dry. So if you guys need to interject anything in between, then just go ahead and raise your hand. I'm sure Karen will see you and then we can discuss it. I'm going to present you some information. Hopefully you might want to hold your questions until after the presentation because I have allowed for a few minutes for a question and answer. But today I'm just going to give you a little overview. If I had gotten totally into credit repair, credit and personal credit and how it all works, it would take us more than an hour. So I have put together some things that may be relative to the farmers or those of you who are already in the farm business and that may help you, okay? So the first thing I want to say is farmers and your credit can be somewhat different than a consumer without a farm or business. And when I say that, I'm talking more or less about you may need more money, okay? You're asking for bigger lines of credit. You may need more extended time to pay back your loans. And then farmers may obtain credit through collateral, which sometimes in personal credit, we don't use collateral. We just simply use a credit score. Farmers who need financing will most likely turn to their local banks, okay? And then typically it may be easier to turn to a local bank to obtain credit than to obtain a credit from an agency or an institution that does not know you personally personally or know your operation. So this could, well, I'll talk a little bit about that later. But if your personal credit is good, there is no problem, no matter your loans, you will actually get affordable interest rates. But if your credit is bad, I'm sorry, I should have put down that bad, but if your credit is bad, then you'll find yourself getting tied into interest rates that are much higher and less affordable than having good credit. Now, each lending institution has its own credentials or own criteria for lending to you, right? Typically, the first thing to be considered with a farmer is your personal credit. So you have to keep that in mind if you are already in farming or if you're trying to go into the farming business, that your personal credit is still going to be considered. A lender may ask you for a minimum credit score of 660 from at least one of the 3 major credit reporting agencies. And along with that, they're going to ask you perhaps for a business plan before considering you for your agricultural loan. Therefore, having a good or excellent personal credit score positions you as a farmer to obtain the funding needed to operate your agriculture business. Now, this is hard for a lot of people to believe, okay? But simply put, if you wanted to define credit, and this is me, credit is debt. It's all about debt, okay? A lot of people can't seem to get that under their belt, that their credit is not just a happy place to pull out cards and go buy cars and houses and obtain loans for your property and so forth, but it's actually debt. Therefore, the real problem that you have not having an excellent credit score really lies within your personal money management. Most of the time you can resolve most of your issues, or you could never have an issue when it comes to credit if your money right. See, when people think about talk about credit repair, credit restoration, or credit, again, we're talking about just buying up a lot of things or obtaining a lot of debt. Then also, if you needed to repair it or restore it, a lot of people are just looking to delete items from their credit that they have actually messed up, okay? Not to say that it's not your right, and in some cases to have those things deleted and done away with that you don't have to pay for. But the bulk of what the problem is with anyone's credit, no matter what your position is, it is about your personal money management style, which has to include a budgeting system, a good budgeting system. I'm sure those of you that are experienced in this, you know that it takes a good budgeting system for you to actually run your farm. Well, it takes a good budgeting system for you to actually have excellent credit, which means you also have to, and this is all about credit now, you also have to prepare for the future. In order to have good credit, it is extended to how you build emergency for the situations and circumstances that will come up, how you minimize your expenses and the things that you don't have to have, don't get, don't charge. So you still need to understand the credit world so that you can have excellent credit to do business. According to Successful Farming Online newsletter published by agriculture.com, reducing costs and increasing revenue can help any farmer be successful when it comes to managing their business. So again, when we talk about credit, I know a lot of people says, let's go into saying about the score, let's go into about deletion. But before you go into that, you got to go into your money management style in order for you to be successful, because you can go in and pay off all debt now, or you can go in and have things deleted, and you still won't be successful if you run your credit management style haphazardly, in what we call with the lack of knowledge on interest rates and how you can put forth strategy to help you gain this, pay off that. So believe it or not, paying attention to your expenses and your percentage of your debt helps increase your credit scores and helps you maintain a healthy credit profile. So let's look at your framework. When it comes to building credit, the framework of building credit is based on your credit score. Now, I'm showing you, which most of you are probably familiar with, but I'm showing you a FICO score wheel. But you also, FICO is just one system of scoring, and then there's also Vantage scoring, okay? But Vantage scoring is not as popular as the FICO scores. So you first got to understand that the 35% of your credit is based on your payment history, okay? Payment history is simply meaning, do you pay your debt on time? Uh, excuse me, somebody need to mute. Okay. Do you pay your debt on time, or how have you paid your debt? It's based on actually every 90 days. When a lender is taking a look at the algorithm is being calculated for your scores, is going to calculate how you have paid your debt within 90 days. That's why there are times when you have a credit, you might have missed your payment in the first 30 days and you don't see it on your credit report that you have a late payment. But if you go past that 30 days, up to 90 days, 60, 90 days, there are some lenders who will start reporting you. Some do not report you until after the full 90 days, and then they will hit you with 30, 60, 90, and you'll see that on your credit report. Now, late payments, what they do for you, they actually lower your score anywhere from 50 to 100 points. So instead of being late on any of your payments, you really want to work out some type of extension. If it's a vehicle, you might can run an extension on the back end. If it's a home loan, you might can get an extension, run the payment on the back end, these type of things, so that you can keep from getting that hit. Because after you get hit with that 50, 100 points, now you got to jump in and find a way to get those points back up. Okay, then 30% of your FICO scoring is based on the amounts that you owe. Okay, so we're going to talk a little bit later about your utilization, but that's basically what that's talking about. If you have a line of credit that's $1,000 and you keep that credit card at $1,000 or $999, then even if you are paying a minimum monthly payment, and you can have, I mean, I had a client that had a 42-page report and had probably 30 lines of credit and was paying minimum payment on all of it. And she thought that she wanted to go borrow some money, and she thought that, wait, because I am keeping all of these paid, then certainly my score ought to be high. I should have excellent credit. Well, on the contrary, it was not excellent, because all of her credit cards, her debts were maxed out. She never paid them below ideal percentage to gain a good score. So that's why sometimes you can't get a loan, is because you have other debt that has not been paid down. Then we go to the length of credit history, which is 15% of your FICO score. And that just simply means how long you have been building credit. And then two of the smaller areas, but yet they can actually be a boost to your credit, is new credit and credit mix. So when we talk about credit mix, we want to talk about whether they're soft credit or hard credit. That's obtaining a revolving debt, installation debt, these types of things like a home, a car, credit cards, great mixture. And you should have at least 3 open lines of credit to build from. So you don't have to have a lot of credit to have an excellent score. You just have to have at least 3 open lines of credit, and then have those in a mixture that can actually boost your score and make it healthy. When it comes to new credit, 10% goes with your new credit. There are some times when you will come at your credit score and you'll say, well, it's been a 660 or 630 or 620 for so long. And in people's mind, I paid the debt off, and I don't want to get any more credit. Well, on the contrary, again, if you are hanging out there, you need to boost your score by getting new credit. Okay, so sometimes that new credit will give you up to 20 to 50 points so that you can grow to your 700s, your 800s, your 850, and on Vantage scoring is 900. Okay, so this is the framework for building great credit. And without boring you with all of those other percentages, I think you can get the point on each one of them is important to your score. So you have to take a look at your money management skills and implement strategies that meet the need for each one of these areas. Okay, now let's talk about utilization, because this one I chose to talk about with you guys because as I look at farmers, and I have a friend who actually comes out and help farmers and so forth and interviewing so that I could give you some information that may be relative to what you're dealing with. A lot of what hurts any consumer score is that utilization. We just talked about 30% of the FICO score is based on how much debt you have. And so if you keep a large amount of debt on your consumer report, then your scores are always going to be low. At some point, you have to make a plan. It's a game, but you have to make a plan to pay those debts off. And then within 3 to 6 months, you want to go back in and obtain or use one of you don't have to get new credit, but if you paid off a credit card or you paid off a loan, a bank loan, then you might want to just get a small amount. That's another thing. You don't have to get large amounts for you to have an excellent credit score. You can put $20 worth of gas on your credit card, turn around and pay it off before its cycle date, because number one, you're going to lose interest, right? When you pay it off before that cycle date, you'll lose the interest on that card. And then the second thing that happens is you will bump the algorithm of scoring up, which will what we call rebucket you in another group of paying on time, and it will increase your score. So credit utilization refers to the amount of credit you have used compared with how much credit you have been extended by a lender. It also refers to a ratio that lenders use to determine your credit worthiness and is a factor that is used to determine your credit score. Let's look at an example. So we got Bob here that may have $7,000 worth of credit card debt compared with Hank, who has $9,000. But Bob might have a lower credit score because he has used 47% of his $15,000 in available credit. Okay, Hank has $22,000 in available credit, and he might have a better score because he's at 41%. But ideally, you really want to have 35% or below that line of credit that is extended to you. So let me tell you what you're looking at. When you look at your credit report, you will have, and I'm not talking about particularly Credit Karma either, because Credit Karma is it's about marketing you. It's about, if you notice, everybody's offering everything on there. It's free. It only has 2 reports, and it doesn't have the total detail. And some fault in it has been it doesn't carry a true FICO score. So some people are surprised when they go to get debt that their scores are different because they're only using Credit Karma. So you need to get a good credit report that has all 3 of the credit bureaus on there. All of the details. Have that type is going to, or if you have like Capital One will tell you when you open up credit wise, it will tell you how much total credit you have and how much space or how much room you can actually charge on that. That's what you want to look at, is what you're reporting for your income. If you are reporting $100,000, $200,000, $300,000, then your total debt your percentage is gotten from the total monthly payment divided by that total amount of debt. Okay, so you want to keep that healthy. Now, here's another problem that you may have. For those who are going into business early on, and you have had the idea that everything should be paid in cash, that's what you want to do. Then what happens is you lack credit history. So what do you do if you lack credit history? Well, you're going to pay your expenses on time in some cases. A lot of people don't understand that you can actually, lenders will accept a payment history from utilities or rent. Okay, if you don't have any credit history, so that goes back to your money management strategy, right? So on money management, you want to pay your expenses. Expenses is not the same thing as debt. So you want to pay those utilities on time, because this may move you to a point. If you were going to get a home loan and you didn't have any credit, then that means that they can manually underwrite your loan. Now, this is something that will not be told, because they want to go a different way because of money and points and all this kind of thing that they will make, and they don't want the trouble. But you do have that option, and just know you do. The next thing is you can become an authorized user on someone else's credit, but make sure that they have good credit history, on-time payments, and good utilization. Okay, so you don't want to just get anybody and say, hey, put me on your credit card. You want to explore. You want to call that credit card company. I'm sorry, you want to call that credit card company, and you want to ask that credit card company, what is the history? Who are they reporting to? Because that's important as well, as to if they're reporting to all three bureaus. So that's what you're trying to do when you are trying to build, due to the fact that you don't have a good credit history going on. So I want to talk about this because I want to give you an alternative. If you are in business, there's an alternative that can take you away from your personal credit. I've had customers that come to me because they wanted to get business business. They may have, and they're trying business loan, or debt over credit. So the alternative to your personal credit is building business credit. And I believe someone on here is scheduled to talk to you all about LLC, S Corp, C Corp, actually finding out what is best for your business and how to set yourself up to move over to qualify for these things. So there is always an alternative. Now, you should keep in mind, you want to keep your personal credit in great shape, because you're going to need it, okay? Remember, we talked about earlier, and I'm sure you guys have experienced it already, that the bank may ask you for a 660. At the same time, if you have poor credit, you can actually raise business credit, and your poor credit will never be touched, okay? So this is an option to your, and I wanted to put that in there because of the of how you are aligned, which is different from a regular consumer obtaining credit. So you have the opportunity to take advantage of having business credit. Number one, the advantage is you can obtain credit away from your personal credit, which I just stated, even if your personal credit is bad. Number two, it protects your personal credit. I just talked about being overweighted, having too much debt. A trucker that I had, he actually had all of his trucks financed through his local bank. See, that's the thing. We have that relationship with the bank, and so the bank gives us whatever they give us, but bankers are not here. Y'all got to remember that. They're not here to take care of our personal financial strategies. They are there to give you loans and make money off of the loans that you obtain. We have to keep that in mind. No matter how friendly they are, we love them, but this is their duty. This is their mission. So you got to protect your personal credit because you may want to do things separately. Number three, it opened doors for greater amounts of credit. So if you have your business credit paydex score in place, you got your Dun and Bradstreet, you got your EIN number, you got everything else that it takes to build great business credit, then there are times when you can get millions of dollars to actually finance what you're trying to do. Number four, and it doesn't have to be done through traditional lenders. You have opportunity to have investors, angel investors, and so forth, who may help you. Number four, it leads to lower insurance premiums and lower interest rates. Because if you compare, I'm gonna give you this example. If you go to AT&T and you're getting phone lines at AT&T, particularly our cell phones, you're going to get higher rates because, and that's crazy because you're a consumer. But if you're in business, you almost pay nothing. Lights, gas, and water at our home turns out to be more money than if we put it in our business name. Like my home lights and gas may be like $125, but at my office, it's $50, okay? Then number five, it helps you get approved for a lease, business loan, business line of credit for expansion and growth, and it secures better vendor terms, okay? Now, in closing, and I'm leaving some space for questions. I don't think I've quite been an hour, but I want to give you an opportunity to ask a few questions. In closing, let's look at some COVID updates that may protect you personally with your credit. First thing you want to do is, if you're having a tough time due to COVID, you want to reach out to your lenders. And it also includes reaching out to your mortgage servicers, your credit card companies, as well as your utility providers, cell phone service, landlords, and others that you owe money to and who provide data on accounts in collection. In other words, they report to the credit bureau. You most definitely want to start there. Now, credit card companies and mortgage servicers may give you an opportunity to defer. I want to make this clear. But last I checked, they will still put a late payment on your mortgage, on your credit report. So if you don't have to have a forbearance or an extension or deferment on any of it, guess what? The best thing to do is to continue to struggle through. But if it is a must, then it is there. And later, you can work to rebuild your good name and your credit score, just as long as you have that debt under control. So under the COVID-19, there are some things that these lenders are doing, like defer or pause one or more payments. Sometimes you can make a partial payment, forbear, which is a temporarily stop payment on any delinquent amounts, modify a loan or a contract, receive a suspension for federal student loan payments. As a matter of fact, any of you that had any student loans that you are repaying, you should have gotten a notice already that has been extended. That monthly payment has been extended to September 2021. And then other assistance or relief may apply. And all of this, simply, you guys, depend on the lender. So that's why you got to give them a call and ask them what is available to help you out. Okay, so I'm here for question and answers. Let's see if I can. Okay, are there any questions or comments? You can come off mute and ask. Did I see anything in chat?
Okay, I think there's one. How heavily weighed score a rhythm?
Okay, in the algorithm of the FICO scoring, very heavy, because what happens is your student loans, there's a good and a bad. Okay, since you guys are
Okay, she has me hosting this meeting also.
okay, since you guys are at UAPB, you're in the college area, and I'm sure you're dealing with some college students in this department. The good to the student loans is that your students get a chance to build a credit score on their own. Okay, I just want to insert that in there so that you can share that with college students. I've been teaching college students about their credit and getting some of them that I've been working with. I've been getting them to an 800, 850 credit score if they understand how to manage that debt and obtain new debt when they graduate or while they are in college. So it can be good news to those who are lacking credit history, okay? But once you've gotten to my age, you got out, you got them, what happens is that you want to consolidate those student loans, because what happened when we were younger and going to school, they had all, seemed like it was all in one debt. If you owed $60,000, that was one line item, right? Every semester, right, we have a new credit being added to our credit report. So what needs to happen that will give your credit a boost, almost up to 100, 150 score, is that you consolidate them instead of putting them all on deferment or all on forbearance. Work at consolidating all of your student loans into one payment. Now, what this does is on your credit report, it should show all 15, 20 entries as paid in full. Now, imagine what that looks like. That rebuckets you and it increases your credit score. Now you've got them all in one line item on your credit report, and then you can negotiate your monthly payment, the income contingent repayment plan, whatever you want to get on. You can still have a low monthly payment. And if you are in forgiveness, if you have any of it that can be forgiven, and I think somebody's going to talk about taxes, this is where it's great to lower your tax liability, because the adjusted gross income will get plenty of you put on the forgiven list and have 0 monthly payments that will count towards your total payments that should be made for your forgiveness program. So it's a win-win situation if you understand the strategy. But I recommend that you consolidate those loans. That's just me. In my experience, I got over 20 years in credit repair, okay? And so I've seen this thing work for people tremendously, when really the only thing that was really holding them up with a poor credit score was those student loans. Any other questions? Yes, I've done it.
This from Miss Karen Lee. She said you can request your credit reports for free weekly from each of the nationwide credit reporting agencies through April 2021 by visiting annualcreditreport.com. Again, that's annualcreditreport.com.
Absolutely. And let me interject there is that, so when you see advertisement and say free credit reports, don't go there. But if you go to annual credit report, can I say something? That annual credit report is obtained every 12 months. Don't say 1 year, because if you do pull that report in May, or you pull it in February, then the next year during February, you can download another. Now, what I recommend, because we have a lot of people who want to bypass paying for things, when you do pull your credit reports from the annualcreditreport.com, pay for your score. I have a lot of people want to bypass paying anything. It's a service like anything else. Pay for that score. Why do you want to pay for the score? Because you want to have a score to gauge your strategy on. If you don't know what your scores are, how do you know what you need to do with your credit report? So get your score as well. Don't just get that report and play guessing game. The score is what you're trying to fix, right? The score is where you're trying to build it to so that you can get what you need to run your business. So you must have your score. I recommend that you pay that $8, $5, $3, whatever it is now, pay it and get your score. All right.
Thank you, Ms. Pace.
All
Can
right.
Candy, can I ask a question first before we move on? This
Yes,
is
ma'am.
On the credit report, do you recommend spreading it out among the different agencies during the year? So for example, the first quarter do one agency, the second quarter do a different agency, and the third quarter maybe do another agency, so that you can have that score or that information throughout the year?
No, I don't. I actually recommend what we do is a debt elimination program. And I'm sure you've heard about the snowball effect and so forth. I think what you should do is you should actually, I have a program. Incidentally, you guys, I have this information in a do-it-yourself program. If you want to, if you don't mind, Karen, is that okay that I share this? That I have a do-it-yourself program that you can, is that okay, Karen?
Yes.
Okay, okay. I do have a do-it-yourself program that all of you got a crash course that'll start you on a crash course, and it teaches you all the way up to eliminating your debt and putting things together. So what needs to happen is sorry you guys, I didn't say. What needs to happen is you need to list your debt out and create a debt elimination program for yourself, or debt elimination strategy. What happens in that strategy, you're going to know which creditor or has the highest interest rate. So you want to pay, our program will actually create that for you and know which one is carrying the highest interest rate. So you want to pay those according to your interest rate, because you want to be healthy both financially, right, and on your credit report. So don't spread it out. That's the old way we used to pay a little dab over here, a little dab over there. No, create a debt elimination program plan and begin to release those debts according to the interest and how much you are losing, because you could take that money and put it back into your cash flow, and you can do other things with that, like invest and pay off other things that you need on your farm and so forth. Okay, so that's what I recommend.
Thank you, Ms. Pace. I
Okay.
also have a question. Are you certified through USDA to do housing counseling?
I am a certified housing counselor, but I'm not through USDA. I do credit counseling for and get your certificate so that you can get down payment assistance program and that. Yes. Mm-hmm.
Okay. Mrs. Pace, a question.
Yes. Ms. Pace, you talked about FICO scores in general. I know that there are different FICO platforms. Say, for example, FICO Score 9.
Mm-hmm.
Is that the most comprehensive score in terms of total credit analysis?
That's the last one that's been created. And let me tell you something about, oh boy, this is a crazy industry, okay? That is the last one that you're looking at. And each one of those, now let me tell you, those numbers of those different FICO scores, they are assigned to the different credit that you are obtaining. So FICO Score 9 may be used for mortgages. FICO Score 8 may be used for a car. These things, okay? So that's how they go. 7, 8, 9, these numbers are assigned to evaluate your credit for certain debt that you're going to obtain. So that's not all the way across the board, okay? But I can tell you this, it's crazy, because let me put this in here for those of you. Let me be honest with you, okay? I was trying to be nice. Let me be honest with you. Not more, almost 90% of every citizen in this world who has are inaccurate. I don't care if you do have a good credit score, you will find inaccuracies. I am trained with, I go get educated, okay? And I'm trained by the person who actually created the credit scoring system. The one thing he revealed to us as credit specialists is that Even if you have a payment on time, it's not reported on the credit report accurately because they can't. They have not created a system. So all of this is a little fancy deal that you see, FICO, Vantage scoring. All of this is to fool us as consumers so that they can make money. That's the bottom line. So they can make money. So the thing that you do is go look up these scores and see what those requirements are before you go after your lenders so that you can put things in place. But know this, you always have the opportunity to change your negatives on your credit report due to the fact that there's never going to be 100% accuracy. And because the law says that it has to be, you have that opportunity to change your situation. Does that make sense?
Okay, and a quick follow-up to that. If you're looking at business credit, LLC, is that based on FICO scores as well, your personal FICO scores? No?
Now, what happens is if you're trying to get business credit, some of our lenders, you can do what we call the 3 C's. If you have collateral, cash flow, and credit, that collateral does not have to be your own. It can be a friend, neighbor, relative with collateral. It can be the items that you have in your office, those type of things that can count. And then the score that's needed to go right into getting a business loan would be 680. Now, if you are building your credit away from your personal credit score, then you have several options, but that score is called PAYDEX, P-A-Y-D-E-X, okay? And I have a full, when y'all get together, I was gonna tell Karen if she needed a presentation on that, on building business credit, I'm available to help with that as well. But that's a PAYDEX score, and it is based on a much different basis than your personal credit, where we're looking for a higher score for personal credit. You're looking for lower scores for your PAYDEX score, and you're looking for them to be reported. Experian has them, all of the credit bureaus, Dun & Bradstreet, Navient, these places, and that's a whole bigger presentation, but it's a different score than your personal score.
Okay, thanks.
Okay, and from Karen Lee, if your creditor sold your debt to someone else, do you as the consumer have to pay the new one?
No, ma'am, but you need to know what you're doing. If you just about need to have an expert to help you on that, because here's what that says. A creditor, the original debtor, sells our poor debt, bad debt, charge-offs to what is called a junk debt collector, okay? With a junk debt collector, you do not have a contract with them, okay? So that means you have no obligation to pay them. You will receive letters from them, and on the bottom of the letter, you will notice that it says this is an attempt to collect a debt. They will pass themselves off to be your original debtor or creditor, but they are not. They will say, they will even say, I got a contract with them to collect. So that contract is what we call a robo contract. It is not legal and binding, okay? Most of the time they have made it up by somebody who is in the office. But what needs to happen is if you get a phone call or if you get a letter in the mail, you can turn around and let them know, cease and desist all communications with me, because then you have the credit reporting, let me see, I forgot what it's called, I got so much in my head, Fair Debt Collection Practice Act, that covers you as a consumer as to how they can collect from you. But the point is, never admit to the debt, because as soon as you say, yeah, I remember I had that bill with DirecTV, and but see, this was my situation. As soon as you say yes, you put yourself into a verbal contract, and you need to go ahead and pay it off. But if they call, verification and validation are two different things. They will make a phone call and verify that you are Clarissa Pace and so forth. But they have to validate the debt. So I'm not lying. Yes, this is who I am. You have verified me. Yes. Well, we come to collect from for a direct, oh, that's not my debt. You're not lying. That's not your debt. You don't owe a debt with that company. It's with that company now. And they bought it a penny on a dollar. So they may have bought your debt for $5 or $50. And then they will go in and charge you $500 plus interest, which is against the law because they cannot, if a debt is dead, look on your credit report. If the date of last activity, if it is $500, nobody can collect from you for $501. They can only collect the date of last activity, the amount that was there. Okay, so no, that is not your debt, but you want to be sure because some of them will send it to make sure that you, so you can kill it.
Thank you, Mrs. Pace. I think there's one more from Dr. Miles.
Okay.
How do you obtain the debt elimination checklist you mentioned? This tool will help you to develop a strategy to eliminate debt.
I actually have a program. The do-it-yourself program actually is only $69.99, and all of the tools are in there to help you set up your debt elimination checklist.
Thank you. Are there any other questions? Okay, if not, I would like to thank Ms. Pace. You provided a lot of valuable information to us today. I hope Karen will follow up with you so we can plan a second meeting with you
Okay.
soon.
All right. Bless y'all.
So now if there are no other questions, we will go to the next speaker, which is Mr. Darnell Tenney. Mr. Tenney owns Tenney Group LLC. It's a tax and accounting firm. I believe he's located in North Carolina. Mr. Tenney, if you would like to do a brief introduction, we're waiting.
Please give me 1 second, ma'am.
Okay, yes.
While we're waiting on Mr. Tenney, I just wanted to say again, thank you, Clarissa, for thank you, Ms. Pace, for that wonderful presentation. It was very informational, and I will be back in contact with you. I'm so happy. Hey. Again, go to the annualcreditreport.com while you can. The free reports weekly right now are due to COVID. You usually have to pay on annual credit report after, I think it's one, like Ms. Pace said, but because of COVID, they're allowing people to get them free weekly until April. So that time is coming up. So take advantage of that while it's available. I'm not sure if the new administration is going to add on to this or not. I'm not sure if they're aware of it at this point, but this was something that was put into place and enacted with the CARES Act. So take advantage of it again while you can, because it does end in April 2021. I'm not sure what date that is, but I know that it goes until April 2021. And again, thank you so much, Ms. Pace. Excellent job, excellent.
And before Mr. Tenney begin, I have one other comment. If you're interested in the DIY program, please go to ShekinahCreditManagementSolutions.com. And you can find it in the chat box. Mr. Tenney, now we will turn it over to you.
Good morning. Can everyone hear me?
Yes, sir.
My name is Darrell Tenney, and it's a pleasure to be here with you this morning. We're the Tenney Group. We're a tax and accounting firm, and we specialize in agriculture. One of our specialties is agriculture taxation. Okay, and we are with the Agribusiness Crop Insurance Group. I am a crop insurance agent along, with the Tenney Group, and we cover 15 states, including all the states maybe on here today. But it's a pleasure to meet with you. We want to discuss this morning about business structures, business entities, okay? And as everyone knows, for agriculture, the PPP is back out, okay? And this morning, we want to give the opportunity to talk to you how it's important to have record keeping, business structure, everything in place as we are now trying to utilize the PPP programs to benefit our organization. Now, one thing that also, just a quick note for ones who don't know, a lot of agriculturists on the last PPP program missed out. Now, they just changed it. Now, you had to have a profit on your Schedule F on the first round to qualify, okay? Now, you don't. Now, on all agriculture Schedule Fs, your PPP will be based on your gross income. It's the latest report we got. I'm gonna repeat that. That's very, very vital. And one of the biggest change is your gross income, okay? And we're gonna talk today how business structure helps support that, how business structure help you, the entity, apply for these programs instead of the person themselves, okay? So again, now, if any questions about that, please let us know. We just actually got back from from Mississippi, which we have an office in Oklahoma, Mississippi, and just to announce, we will be opening an office in Little Rock, Arkansas as well. So we will be opening an office here in Little Rock. We're putting the finalization on the Little Rock, Arkansas as well, okay? But our mission as the Tenney Group here is to educate and empower everyone in understanding our sustainability through accountability, okay? And as we say, the agribusiness way. All right, and we want to talk about, we have to say this information we're here today regarding entities of a taxpayer's own and its relation. We are not lawyers, but we can recommend you lawyers who work with us to provide us legal advice information. It's a disclaimer that we have to have in some states, so we're announcing all, okay? Now, we want to talk about today, what are you? So you were told you was a business entity. What does that mean to you? The next slide, we will define the different types of business entities. We work with entities throughout the U.S. now, okay? As we stated, we have offices throughout multiple states now, and as we're starting to grow. And one of the things that we do here, we help define your entities. We show you what those differences are. What's the LLC? What's the INC, okay? And one of the things that we want to talk to you about the entities today is called a sole proprietorship, partnership, S corporation, C corporation, nonprofits. And as we always say, normally as we do virtual now, normally being person, I always ask this question: how many people have heard of LLCs, so commonly called limited liability company? Okay, here's where most people are having problems. It's with that LLC because they do not understand how a limited liability company works. Okay, all right. So I'm going to spend all that to you today. At any time in the presentation, please, if anyone can hold their hands up or whatever and ask any question, I'll stop at any time, okay? Now, here we go. Now, this form right here is called an SS4 form, okay? So commonly referred to as the EIN number, okay? This is the most important piece of paper that you can have in any business entity, is that SS4 form EIN number. But here's where most people have messed up the most. It's from the absolute beginning. The EIN number is what we tell the IRS how they track you and the following requirements that you have. Where people mess up, they don't understand. When you check this box here, everybody put a name and address, but when you get around to 9A, when they ask you what type you are, whatever box you check is what you told the IRS is your filing requirement. If you check a sole proprietorship, you just told them that you are a sole proprietor, a Schedule C or Schedule F filing requirements. If you check partnership, you just told the IRS that you are going to file a 1065 partnership. If you check corporation, You just told them you're going to file an 1120S or 1120C corporate return. If you check church, you just told IRS, I don't have any filing, I should not have any file requirements. But what people mess up the most is when they fill out the EIN number, no one reads it. No one knows what those requirements are. But as we get in here, I'm explaining to you how this piece of paper affects you and how it hurts most people the most, okay? Now, we're going to talk about sole proprietorship, okay? Sole proprietor, also called an independent contractor, consultant, or freelancer. One person operation. The business may have a number of employees or a hired person, but the proprietor's own runs and manages business. No funds are required to start this type of business. Only report the income and expenses of the business on a 1040 Schedule C. Okay, now remember that. This is called ordinary business 1040 Schedule C. Okay, sole proprietorships, the important notes remember as a sole proprietor, it's very easy to organize. If anyone wake up this morning and say, people ask me all the time, do I need a EIN number to start a sole proprietorship? The answer is no. Should you have an EIN number to start a business? The answer is absolutely yes. The purpose of the EIN number is so that you won't have to give your Social Security number, okay? But a sole proprietorship is very easy to organize. But the biggest disadvantage to a sole proprietorship, unlimited liability. I'll repeat that. That's the biggest disadvantage to a sole proprietorship. Whatever you do, unlimited. Now, it says you have ABC Farms here today, okay? And ABC Farms went out here and made $10,000 a day. As a sole proprietorship, ABC Farms didn't make a dime. The individual made $10,000. That's one thing as sole proprietorship. Owner is free to make decisions, but minimum legal restriction. Owner receives all profits. I'm gonna repeat that. As a sole proprietor, the owner receives all profits. The owner carries all liability. But one thing about sole proprietorships is you must keep good records. The goal for any business entity, no matter what your structure is, reduce taxable income. For example, your business when I had a day and made $100, okay? I had to, hear this training or whatever, and I spent $50 in fuel. But next year, this time, your tax income is only gonna be $50. You say, well, I don't know if I have enough paper and pencil to write down what I made here today. So I stopped by my local Walmart and spent $20 on office supplies, paper and pencils. Guess what? Next year, this time, your tax income is only gonna be $30, okay? Lo and behold, I have a blowout, had to do a repair and maintenance. Now, fuel and repair offsets, but next year it spent $40. So if my math is right, you made $100 a day, but you spent 110. Well, guess what? There's no taxable income next year, okay? Because if you don't keep your record, you're gonna pay taxes on that whole $100. But if you do not keep your records of expenses, if you keep record of expenses, there's zero taxable income to pay on that money. So this is important to understand how expenses work along with sole proprietorship. Now, this is a form that you utilize, fill out a Schedule C ordinary business. This form called Schedule C. But if you are agriculturalist, this is one form you do not use. I'll repeat that. If you're in any type of agricultural operation, a Schedule C is one form you do not use, okay? Here's what a lot of my agriculturists of all the states we serve, it runs into problems, they're using Schedule Cs, okay? Do not use a Schedule C. These are legal business expenses, okay? Deduction, advertising, car and trucks, commission, contract labor, depletion, depreciation, employee benefits, okay? Insurance, interest, legal and repair, office expense, pension, profit sharing, rent and lease, repair and maintenance, supplies, tax and license, travel, music and entertainments, utilities, and wages. One of the things that we stop here a lot of time because on wages, a lot of people don't understand. Once you pay yourself from your entity, you should always, if you can, pay yourself from your entity. You pay Social Security, you pay Medicare. But one biggest thing that most people miss in paying yourself from your own entity, you qualify for unemployment. And I repeat that. If you pay yourself your own entity, you also qualify for unemployment. And a lot of people miss that opportunity, but we're going to talk about it a little further on. But these are ordinary business expenses, okay? These are what we consider as ordinary business expenses, but you're going to see how they look similar, okay? Because now we're going to talk about farm income and expenses, okay? Now, if you're agriculturalist, this is a very important piece. This is a very important portion of what we try to explain, what we try to show. In farm income and expenses, here is the only way that you report farm income. Identify where it came from. People in agriculture on that farm schedule saw you have an ordinary put it on one spot. Income. Sales of resale items. Costs and other bases or other items reported. Now, if you see I have a minus beside that, that means if you bought a bull for $2,000 and you sold it for $4,000, you must subtract the cost basis. A lot of people do not subtract cost basis on items that they list. You must subtract the cost basis, okay? Sales of livestock, produce, grains, and other products you raise. Now, in agriculture, a lot of people get 1 and 3 mixed up. One says and other. If you bought a bag of tomatoes and you sold them, that's a resellable item. That's where you report sales a resale item. But if you raise tomatoes, sales of livestock, produce, grains, and other products you raise, if you raise them and sold them, this is where you report that income, okay? Corporate distribution, agricultural program payments, commodity credit and corporation loan, crop insurance proceeds, and other federal disaster programs. We stop here because being a crop insurance agent, if you receive incomes in most disasters or most losses throughout the year, there's certain criteria for qualifying factors that you do not have to report that income in the year you receive it. And this is one of the reasons you do not, absolutely do not use anything but a Schedule F, and we're going to show you why. But for crop insurance proceeds, you always, remember, always, and other items, you may not have to report them in the year you receive them as taxable income, and we're going to show you how you custom hire, other income, and gross income. Ladies and gentlemen, this is the only way as agribusiness men and women that you report agricultural income. You never report agricultural income on one line. You always separate and identify the source of that income, okay? Now, here are your agricultural expenses, okay? Car and truck expenses, chemical, conservation expense. I get this question all the time. When they come through our office, all the states that we serve, they say, do I have to report conservation expense? If you get in a 1099, the answer is absolutely yes, and normally you do. But as I tell many of the clients, if you got $50,000 for fencing and you spent $51,000 in fencing, there's no taxable income. You got to keep good records. You got to keep good records. And we're going to show you how clients keep our records for. We have a booklet that has all 5 financial statements with financial booklet. Okay. Now, custom hire, depreciation. A lot of people miss depreciation. Okay. Why? Depreciation expense, especially in farming, combines, tractors, whatever, normally over 10,000, to capture that through depreciation. Depreciation can reduce your tax. Our goal says to depreciation, but you all back in. If you say my nigga $10,000 a year on, but in depreciation, farm made, all right, because again, after you, if my had a 10,000 and had $20,000, my farm actually $30,000 gain. They had depreciation. Okay. The employee benefit, fertilizer, freight and trucking, fuel, or other interests, labor, pension and profit sharing, or lease. Many of our do not cap and lease. We always hear it all the time. We talk a lot about farmers who renting land. A lot of times they say, well, they just told me to put something in my hand, put a little something in my hand. And I tell people all the time, if you put a little something in their hands, whatever you put in their hand, you're going to end up paying tax on it if you don't get some type of documentation. You have to have documentation because a lot of cash payouts sometimes, many times, are disallowed, okay? So vehicle, machinery, equipment, land animals, repair and maintenance, season plants, storage and use, supplies, always remember, everything in agriculture is not a supply. You must always separate things. And I said to a lot of our agriculturists come in, we say, where's your chemical? We ask all of our clients questions. We really drill down into our clients, making sure the categorization is correctly, especially for crop insurance purposes, making sure the categorization is correctly for taxation purposes. We drill our clients. We want to make sure our clients are categorized correctly. And many times the farmers always say, I gave it to you. I gave it to your office. I gave it to you, Darrell. I said, where's that? It's in supplies. Everything is not a supply. Because orders are done randomly, but you sure can spark an order. And we always have this problem. People say, well, what do you mean by it, Darrell? If you say I'm growing tomatoes and I make $100,000. But if I put $90,000 in supplies, the first thing are they going to say, well, where's your seed? Where's your plants? Where's your other categorization? It has to make sense. Okay, you can't have 9,000 supplies on tomatoes. You made 100,000. You got to have other categories that makes sense. Okay, and in agriculture taxation, any taxation, it has to make sense. Okay, now we talk about taxes, utilities, veterinary, breeding, and machine and medicine. Please understand, these are your tax deductible expenses for agriculturists. But if you don't see it here, and you say, I went out and bought a refrigerator to cool down my produce, write it down. That is a refrigerator, $1,100. Yes, you can put it on equipment. Yes, you can appreciate it. But if you don't know where it goes, write it down to claim that legal deductible expense to reduce taxable income. Okay? A lot of people don't understand. People ask me and say, well, do I have to money to claim reductions? The answer is no. When you walk in this morning, how to grow tomatoes, guess what? When you drove to Walmart to get the book on how to grow tomatoes, now the fuel is the miles tax deductible. When you bought the book, it's tax deductible. You went home, start researching internet to how to grow tomatoes. These are tax deductible expenses that you can utilize. You always remember, you got to spend money to make money. Okay, and so these are things that we show people. If you're starting a business, you have startup costs. Okay, now, as I told you earlier, the only place that you put agricultural income is Schedule F. Okay, now, meaning once you form your corporation, as we get further along in the presentation real quickly, you always remember, file and attach it to your corporate return. You always file Schedule F. And as I'm getting out of here, I want you to understand what I meant when I said, if you get down on around a 3A and 4A, and I use 6A as we have a lot of experience with 6. When you get down to crop insurance proceeds amount received in 2020, where in crop insurance, or if you have any type of cooperative distribution program or agriculture program payment, you see in 3A, 4A, 5B, and 6A. What we're saying here is, if you qualify for deferred income, a lot of programs, you do not have to report the income. You do not have to report the income received in that year as taxable income. How do you do that? You put in the amount on 6A, 3A, 4A, 5A. But when you go over to line 6A and it says taxable income, you put 0. Because what you're saying, I'm reporting that I received the information, but I do not want that to be considered as taxable income for this year. See, a lot of times when people receive proceeds, but they're spending money or recurring a lot of expenses to the following year. If you qualify for deferred income, this is why you never use a Schedule C in agriculture income. And this is why you always separate it, because you always have opportunities to income. So I repeat to any agriculturalist, not use a Schedule C in agriculture. You only use a Schedule F no matter what, okay? If any questions, please do not hesitate to stop, okay? Now, we're going to talk about, we're going to talk about if you are, this is a form you use if you're renting farmland. Some people miss this opportunity to use this form here, okay? Now, part 1 is renting farmland. Of course, you can use a Schedule F, or you materially participate, you can use this form here, okay? And part 2 is expenses, okay? Now, we're going to go, we're going to go into what's called a disregarded income. A disregarded entity, is also called a pass-through entity, one that is distinct from its owners for purposes, but not when it comes down to taxes. So proprietorship and partnership, for example, are disregarded entities because the owners of these corporations report the income on their personal tax return. Corporations are generally an example of business entity that is not disregarded, except for a scheduled S corporation, real estate investment trust. A corporation is generally pays taxes on its profits before distribution to shareholders. Well, disregarded entity, this basically is what they call a pass-through. We're going to show what a pass-through is now. The next one is a partnership, okay? As we talk about pass-throughs. A partnership is an aggregate of owners. Two or more persons contribute their assets to the business and may share the management responsibilities of profits and losses. Each partner pledges faith in the other partner and stands liable for its actions of all partners within its scope of partnership activities. Now, here's what a partnership does. A partnership is just like similar to a sole proprietorship. It's very easy to organize, but as a partnership, unlimited liability for general partners, okay? This is what you consider a general partner. If two individuals get together and say, we've been friends for life, or we've been friends, we just met, and we want to start a partnership. We're gonna start a farm, but we're gonna do it as partners. If you do it as a general partnership, then this is what you'll file, a Form 1065. That's called a general partnership. Now, as for an S corporation, a general partnership will give you a K-1 form. You cannot file your personal tax returns without filling out your K-1 form, okay, without receiving a K-1 form. This is why pass-through entities like a S corporation partnerships are due March 15th. Personal returns are due April 15th, and corporate returns are due, nonprofit returns are due May 15th, okay? If you have a pass-through entity, you cannot file your personal taxes without without receiving your K-1 form. Now, here's the one we're gonna get into where everybody has a problem, at the Secretary of State's, okay? Now, a corporation is a group of persons with established entity. A corporation is a group of persons with established entity. I'm going to read this for me. Secretary of State granted certain legal rights and privileges and liabilities. A S corporation is an eligible domestic corporation that wants to avoid double taxation. Once the shareholders, and again, to corporations by electing to using a Form 2553, election by a small business corporation. A S corporation is not a sole proprietorship or get into it where we are. When you go to your Secretary of State and you file articles of organization, a lot of people think people understand organization, you are creating a limited liability company. So commonly referred to a limited company it's an group of people. Repeat that. It's not an organization of a group of people. LLC, if you file articles of incorporation in your state, now you file a corporation within your state. But when you go out and file your articles of organization or articles of corporation or nonprofits, you have not told the IRS anything. So that's what a lot of people say. Well, I went down to the Secretary of State, I filed the papers, and I thought they would give my EIN number. Nope, I don't give you EIN number. Nope. The only thing you're doing is telling the state of Arkansas or whatever state you may be located in, North Carolina, Mississippi, Florida, whatever, is that I have an entity within that state. But here's where people have problems at. You file a LLC. It has some characteristics of a partnership and some characteristics of a corporation. A LLC may be organized to avoid double taxation, which frequently accompanies a S corporation. The owners of LLCs are called members or managers. LLCs are managed by members or managers who may or may not be members. This distinction of a member-managed LLC or a managed LLC. Now, let me explain what I just said. If 10 people on this call say, we're going to form a limited liability company, okay? And we all 10 said, guess what? We all don't trust each other, and we're all going to make decisions. We just became a member-managed LLC. If we say 10 people on this call say we're going to select one individual to be the manager. Now we became a managed LLC. That's the distinctions between a member managed LLC and a managed LLC. If you all make a decision, you are a member managed. If one person or you identify individuals to be managers, you now became a managed LLC. But where everyone runs into problems with a limited liability company, a LLC can choose to file 3 different ways. A LLC can choose to file partnership, or elect to be an S corporation. Here's where everybody have a problem. Not understanding, when you form a limited liability company, you can choose your filing requirements, okay? S corporation restrictions are numbered to shall apply, does apply. Can be owned by a corporation. Can be treated as a partnership for federal tax purposes if 2 or more people are owners. Here's now, you are a LLC taxed as a partnership. The disadvantage may be subject to self-employment tax. If you're LLC, over private can be subject to self-employment. LLC or LLC may be limited. You can limit the term of limited liability company. But what people run the problem at, remember that when I went back to that first slide, when I said everyone mess up from the absolute beginning? Liability LLC number. Most people want this to be totally separate. Operate under that. That be the goal of most people. LLCs and if you're so, but if you want to be separate, to be 2, here's where you have a problem. When they ask you a question, are you a single member LLC or multi-member? If this is one person filing LLC, most people are going to say, I'm a single member LLC. There's no wrong with that, okay? Now, it's going to ask you, are you a multi-member LLC? Most people say, yep, me and my partner or partners, we are a multi-member LLC. The problem is, when you check that you are a single member LLC, you just told the IRS, I'm taxed as a sole proprietor. When you checked that you are a multi-member LLC, you just told the IRS, I'm going to be taxed as a 1065 partnership, as a general partnership. But you should have checked you're a corporation. Because if your intent is to be a corporation, to be separate, you should have checked that you're a corporation. And when you check that box, you got 75 days to fill this form out. It's called a 2553. You got 75 days to tell the IRS that I want my S corporation to be taxed as, my LLC be taxed as a corporation. The same thing when you do a 1090, when you go down to Secretary of State and file articles of incorporation. You got 75 days to tell the IRS that I want my INC or LLC to be taxed as a corporation. Submit this form within 75 days.
Mr. Kenny, question?
Yes.
So can you make that election before you get your EIN?
No, because the EIN, you can make this election and the EIN at the same time. Because see, to make this election, you have to have already formed your entity within the. Right. Look at the. If you look at line A, it's of incorporation on. Ask you. So, election, you have filed organization or for your EIN number. You should. Okay, no, you don't, but you need intent to be a corporation. But if you didn't, because you filed for the EIN number, member partnership, this in your employee identification number, then change the, okay?
Yeah, the issue there takes so long. So
If you don't mind me asking, ask Carson, you can also call as well. Apply online.
Yeah.
Did you get a 001? Did you get a code?
I did not apply online, so I've been waiting.
Okay. If you don't mind me, you fax it in, correct? You apply for, you're gonna instantly get it. You're gonna instantly get it. You really need to fax it while we're on this phone. Hang up. While we're on this phone, time you hang up. Things that we try to get there. We go check. You can. Okay. The reason is their code because when people code, sometimes it's because it shares a commonality of a name, like ABC industry. Everybody got an ABC industry. Everybody got this. Everybody got that. So that commonality of name, sometimes they won't issue because there's already someone got an EIN number in that name, under that same name. Okay.
Okay.
Then you have to submit to Secretary of State. But sir, you can get the information. We give you our number afterwards, and you can more than have a call. You get that instant, literally.
Oh, great.
Okay,
thanks a lot.
It pops up to you. Okay. Now, if we have gotten all this information here, right? I mean, gotten the incident, we got our 25 EIN number, and we're now filing this entity. If you don't file this in 75 days, you are going to be denied, unless you right across the top of this form, pencil, crayon, blood, or ink, filing revenue procedure, Rev Prop 2013-30. Filing pursuant Rev Prop, filing pursuant revenue procedure, Rev Prop 2013-30. You literally got to write that across the top of that form, because now you're asking for a late filing, be accepted under the late filing revenue procedure. Okay. A lot of people that once they identify 2 years later that I should have been an LLC, tax election, they're sending it in. They're gonna get denied unless you write that across the top of that form, and you 9 times out of 10 you will get accepted. Okay. Now, the most important thing about this form is the second page. Here is where it gives you ownership. Who owns this company? What percentage do you own this company? Am I married? Should me and my wife have 50-50? Should I give my wife 50%? I take 50%. My question is totally up to you, but my answer to that, mostly, if you are married, filing jointly, give 100% to one person. Okay. Now, I say this all the time to people. If you love each other, you know you ain't going nowhere, put it in one person's name. But if you have a doubt, then you might want to share interests. But the reason I say that is because if you're a husband and wife and something happened to LLC, you both gonna be responsible. But if you only claim one ownership, single ownership, then only the person on it claims responsibility. Not a lawyer, not trying to be attorneys here, but what I'm saying, we do work with a lot of attorneys, but we're saying that's what I get that question a lot of time. Now, if you want to pass it down generationally, you say, I want to give something to my children. I want to take 50%, get one child 25, one child 25, however you want to do it. But remember now, okay, control who interest, they are the ones in charge, okay? Now, we always say, when it comes down to passing down generationally, okay, everyone knows who wants what. Everyone knows who they want to have this. The second page is where you determine who you want to have ownership. I always give example of good child and bad child. Fathers always know exactly what child they want to have. Mama say, I always want my babies to share equally. But you got to remember now, if these babies are sharing equally, and you got 3 and 33 and 30 split evenly, 2 of them come together, 2 can outweigh 1. So if anybody ever come together in ownership now, you're going to outweigh you. If you say, well, I'm going to give myself 40% and give my brother, my sister 30% each. Well, guess what? If they ever come together, that person got control. So this is very, very important in filling out the 2553. A lot of people mess up because they do not understand. LLC have 3 ways you can file it, and you can always go back and straighten stuff out. Now, If I file my LLC January 1st last year, I can go back to January 1st last year and ask for recognition up until that time, okay? But if I did it on March 1st of last year, I cannot go no further back until when the date of inception. I've seen situations where we can go back prior years, but you got to go back and have filed those returns, okay? Now, one thing about this second page, here's where a lot of people run into problems at. People come to me all the time saying, I cannot I don't want to make no more money to rail because I've got to pay all these taxes. Number one, if you're paying a whole lot of taxes, you may be paying a whole lot of taxes because you're not keeping up with records, okay? And one of the things that's very important in keeping up, you must keep up with records. But here is how. If you are correctly, you haven't made one who retired. Some people say, I'm just retired, I can't make but so much. Because if you have the entity receives all the money. Now, you have a K-1 form. But remember, if you structure your entity correctly, receives the money. Now, okay? And for most of them, applying for the PPP programs, things. If you have your not individual, have an entity structured correctly. All of my farmers are programs. Your should be applying. Your INC should be applying. Should be through your entity, you, the farmer. And here's where a lot of times our farmers are weighed down, burden, debt on their head. They are sole proprietors. Here's how a lot of debt is passed down generationally. Because you can always say, well, I got farm number 1, I got farm number 2. Well, let me hit a reset button. We have a problem at farm number 1. So legally, let me hit a reset button. We're gonna start farm number 2, deal with issue number 1. It carries liability, not number 2. But you can't reset yourself. If you're carrying all the debt on your head, you can't start over. So this is the purpose of making sure you understand business structure, business entity, applications for programs, application for this COVID-19 program, knowing that you are structured correct. Pay yourself from your company, okay? This is important now. Again, now, this is why record keeping is absolutely important. All of our clients, we give them a profit and loss statement, balance sheet, cash flow statement, journal ledger, and trial balance, journal ledger in one booklet. One booklet. We have all the forms. These programs are based for that. So this is why it's absolutely crucial now as a 2553 to utilize this, okay? Now, S corporation, double taxation is avoided. When you have an S corp, when you have a corporation and it pays taxes, a C corporation is going to pay taxes. An S corporation does not pay taxes. It paid through the shareholders. That's why you avoid double taxation. Because if you have pay payroll taxes and corporation taxes. S corp, you don't pay taxes. It's paid through the shareholders. And if you have a corporation that you paying yourself from, and you say I paid myself $20,000, but my S corporation lost $10,000, it offsets that income. Now it's tax income only 10, because a payroll is an company. Okay, same limits as a C corporation. Pass through of profits not subject to self-employment tax. Okay, all right. This is the biggest advantage. We list disadvantage, but actually, number of shareholders limit to 100. Less flexible. Shareholders pay tax on undistributed income. If you have a big something left over, you pay yourself through payroll. So you recognize through record keeping what your payroll going to look like. Okay, so I would say that outweighs the good. More better than the good. But S corp have all aspects of the corporation entity, pays no income tax because each shareholder owns profit his or her corporation income tax purposes on their individual income tax. An S corporation must have at least one shareholder, but no more than 100. Okay. Now, here's where you file 1120S. Okay. But let me repeat what I said earlier. If you're agriculturalist, you need to be attaching the Schedule F to your S corporation, okay? All right, you're going to get a K-1 form. You cannot do your personal tax return without getting the K-1 form first. You got to wait on your K-1 form, but that's why they'll do March 15th. Because here's where it says your plus or minus, you got to get a K-1 form. Here's all those partners on, okay? All those ownership, whether it's mom, dad, husband, wife, sister, brother, cousin, whatever, you got to wait on your K-1 form. If you got 100 people, 1% apiece, every one of the people got to wait on the K-1 form before they file their personal tax returns. This is why this is due March 15th, okay? A C corporation, life is perpetual, stockholders have limited liability, transfer ownership is easy to sell. But the disadvantage to a C corp is double taxation. But a corporation is a separate entity. A C corporation stands alone. It does not get a K-1 form. It pays its own taxes. Biggest disadvantage is so-called double taxation, okay? All right, just where you file a C corporation, 1120. Not 1120S, 1120. All right, we're going to talk about in-home but a lot of rules have changed. We're waiting for the new change for this year, but it qualifies for deduction in an area of home that's used exclusive for business. On in-home office, deduct portion of homeowners' interest, real estate taxes, utilities, insurance, rent. A lot of people don't know if you're paying rent, you can deduct rent, part of rent as in-home office, but a lot of these rules are changing now, okay? And we're waiting on a final ruling this year on those. Any repairs to the office, that's an in-home office, okay? Now, here's where you file an in-home office. Remember, you have income, you claim income expenses on in-home offices as well, okay? Now we're gonna talk about, you know, in closing up, the forms that a lot of people miss. In agriculture, this form called reduction attribute, claims for refund, application for certificate of charge and employees annual federal 943. One of the biggest forms that our farmers miss is a form 982. Okay, a lot of people get 1099Cs. A lot of people get reductions, charge. It happens. Whatever. This thing about if debt cancel, normally you put it, debt cancel, that's made for, okay? Debt cancellation, that portion, tax refund, debt cancellation, back 1040 main, wipe that refund out. You should put it on a form. In that box where you see, well, I'm sorry, it says number C, discharge farm in debt is gone. Anytime you receive debt, you put it on. If you qualify, is exclude. People have lost, obviously. You went, and as you see, as also qualified real property business. People are paying tax because they're not putting the form. People come all the time, this 1099, I don't want to claim it because I don't want IRS to know I got it. If you got it, but you got to understand forms in which you can reduce income, exclude charge off, and also this next form, how you can reduce your abatements and penalties. If you got a penalty, the biggest penalty that comes to office all the time, filing late. A lot of people form S corporation, but they don't understand you got the March 15th. And if you got 5 people in your S corporation, you got 10 people are partners in your S corporation or 1, if you file that form, that corporation, each individual shareholder is going to get fined. And I think it's like $950, $975 plus a percentage. So when we get people coming all the time, all my buddies on a corporation, guess what? They file late. Everybody on it, you get fined $900 some times 5 plus percentage of revenue. So, but if you get a penalty, here's where you ask for it to be abated. Okay? Penalties and interest. I always say interest can't be abated, but if there's no penalty, there's no interest. You ask for, you file the form 843 and ask for an abatement. Okay? And you tell the reason why you were late. I was unaware that such as happened, and I'm asking for a first-time abatement. Here's how you get rid of penalties and interest, but penalties because you asked for abatement. A lot of people don't understand it. You can also go back and amend your tax returns, okay? In amending your tax returns, if I say you can get up to 3 years was owed to you. But if you say I'm in arrangements, I'm paying arrangements and stuff, and now I went back and amended it, you can get back to 2 years. But a lot of times people, and you should, as I tell people on garnishment, people ask me all the time, I got garnished. I said, did you call IRS? No. I said, you know why you got garnished? Garnishment is because when you get garnished, the IRS wants you to call and make an arrangement. And once you make an arrangement, they stop the garnishment immediately. Okay? They don't want to shut you down because they can't get their money. And a lot of people run, and a lot of people say, I don't want to do something. Listen, if you have any type of problem with internal revenue, you can always fix that problem. Or you can go into arrangement. Once you go into arrangement, personal income tax, you got 6 years to pay a personal income tax debt. Divided by 72, you got 6 years to pay a personal debt. But you can always go back and, okay? You can always go back and correct the problems. Like we say, if you don't follow your corporation right on time, you don't write the structure right, you can always go back and fix that problem, okay? But this is a form 843 that a lot of people miss because you can get rid of penalties with this form, okay? All right, now this is another form in which people have the indebtedness of farms and stuff. You can use that form to remove liens. Here's another form. You get into arrangement, you have a lot of my farmers have properties and liens. Once you make your arrangement, get everything set up, you can ask for a withdrawal, okay? Now, if you are if you are agriculturalist, when you're doing payroll for your farm, the only form you use is a 943. Do not, I repeat, do not use a 941, okay? Because agricultural payroll is different in percentages than ordinary payroll, okay? Now, just want you to remember, okay? Know what type of business you are, okay? In this time, know if you are, many people are paying tax in our communities are paying taxes they don't owe because they don't know what the structure look like, okay? They don't know what they are. Sole proprietorship, partnership, S corporation, church, nonprofit, I have churches paying taxes that should be paying taxes, okay? Churches don't pay taxes, okay? So what we have people to understand, know what type of business you are. Understand if you do this, it's going to affect you this way, okay? Foundation of a business will determine your tax liability. Please understand. So let's start from the beginning. Solid foundation determines your sustainability. If your structure is not correct, you may have problems. I always tell my clients all the time, when they come after a lot of our business owners in our community stuff, they don't look at us, they don't never look at it in our eyes. They don't have to. They look at our feet because they know we are not standing on solid ground. They're correctly. So that's why they look at our feet, not our eyes, because they know that's how they can get us, because they know we're not standing on solid ground. Our structure is not correct. Our foundation is not intact, okay? Always have accurate accountability of your daily operation. Have your financial statements. We do this for all of our clients, farmers, non-farmers, whatever. Throughout all the states offices open, we make sure you have all 5 financial statements. We want to be your accountant, okay? We want to our client. We want to be your information source. But always know what your accountability, your daily operation is. I get this question all the time. What is the best system for me to get to good record keeping? I tell everybody the same thing. Something you can understand. Do not go out here and get the latest version of QuickBooks, iCloud, Pentium Chip 2 with the iCloud conversion if you don't understand it. You want something you understand that simply says 2 + 2 = 4. Something you can easily understand. You can put information in, you get information out. Whatever you put in is what you're going to get out. If you don't understand what you're putting in or how you're putting it in, you're not going to get it out correctly, okay? So I said to you again, something you understand. A daily expenditure may have implication reduction of taxable income. A lot of people think taxation is from January the 1st to April 15th. Taxation for our agribusiness women here, our entrepreneurs, our non-agriculture, but all of our business people in our communities is from January the 1st to December 31st, every day of the year. So I'm going to say it to you very clearly. For our agribusiness men and women, for our entrepreneurs, for our industrialists, whatever all of our business owners on here, taxation is January 1st to December 31st. Everything you do on a daily basis can carry taxable implication to reduce your taxable income. And that's where we want you to understand, as businessmen and women, legal tax deduction. People here that's saying, oh, they're going to hook me up. People come here so hooked up, we can't get them unhooked. And we tell people all the time, get from under that table, okay? Get on top of that table, because get from operate under that table, because ours on that table now too, okay? Get on top of that table. Set your business up correctly. Set your structure up correctly. Keep proper records, okay? Keep proper records. And let's run our business as true agribusiness men and women, as true entrepreneurs, okay? Because the laws are there for business owners. All these opportunities that's out here now is for our business owners. And I want our business owners to have the opportunity to capitalize and grow through legal deductions, legal structures, and stop operating as, that may not be bad, but in most situations, it come the time to pay the piper. Structure really, maybe the piper going, okay? All right. Any questions?
But I think we so
I'm sorry. I do apologize.
No, it's fine. It was so valuable. We would like as well. Relations on your Little Rock as well.
Finalize that now. Yes.
For anyone that have questions, please put them in the chat box, and we will follow the rail and get those answers.
Okay, and I want to say real briefly, we can more than happy to work with anyone throughout. We want to be accountants. We have also, like I said, Oklahoma, Mississippi, the MFF, Mississippi Farm Associates down there. But we have offices. We're going to be opening in Little Rock, Arkansas, and we serve clients throughout the country. So we would love that opportunity to work with you. I think you maybe pass everybody our information. Do not hesitate to give us a call.
Can you share your PowerPoint presentation with us?
Yes, we're putting all that together. We will share it with you and stuff, but people do ask for it. We have our contact, all of our contact information, everything up there. Also have online Ms. Candace Wright, my business development director, who is a farmer as well. And so with you as well. We're getting on with individuals as well.
Thank you.
Okay.
Ken, do we have time for a couple of questions as Stefan is getting logged in?
Okay, so now we do have time for
This shot me. I apologize. I thought I was cutting short. Please, I apologize what's going, but ask which one. Okay, go ahead.
I put a thumbs up, but I don't think you saw my
Yes, ma'am. Yes, ma'am. Okay, go ahead.
And for those that are interested, this is being recorded, and Karen will convert it down where it can be shared through email.
Okay. All right. I have some
so
questions.
For the first question, what happens if you create a LLC, but then do nothing with the intended business? Do you still have to file?
If you create an LLC as a sole proprietorship, you do not have to file, because if you didn't elect for it to be an S corporation, it is considered a sole proprietorship. Okay. Now, it's all based on your EIN number. What did you check on that box when you got your EIN number? If you got it checked as a partnership, yes, because of 1065, you have to file zeros. If you checked it as a corporation, they're going to be looking for it, but you may have to file zeros, but you're going to get a letter saying, we didn't receive this corporate return. But if you checked it as a sole proprietorship, the answer is no. But if you checked it as a partnership or corporation, you will have to do zero returns. Okay.
Okay, the next question, are the rules the same for corporation or trust or interest?
Well, now again, trusts are somewhat different from an S corporation, because now I'll have to consult people with attorneys on the trust rules and stuff, but they are somewhat different. Now, I cannot be definitive on the trust aspect of it, but we do have attorneys that we kind of send it over to let them be more definitive on that. But the rules are somewhat different than a trust and an S corporation, okay? Yes, they are, because a trust would be trust income versus a pass-through entity, which would be a corporation income. So there are different rules, okay? But I have to convert it to attorney. But you can get us the information too. We can give you more clarity on that and more information, detailed information on that, okay?
Thank you. You were speaking about Form 2553. Could you tell me what need to be written on the top of that form?
If you file but after 75 days, you need to file, and I'm gonna say it out there, it's called filing pursuant revenue procedure, but you put filing pursuant rev, REV dot proc, PROC dot 2013-30. Filing pursuant rev proc 2013-30. What that is saying, you are filing under a late revenue procedure. But now you got to put now, when do you want to be recognized? If you say, well, I didn't know it, I want to be recognized as of January 15, you can, but you have to put that date. But you can't go past the date in which you was recognized at the Secretary of State, okay? But you can't go back further, okay? Now, for some people, if you say, well, I just found this out right now, but when I file my taxes, I'm going to fill my tax out as S corporation, but I'm going to put the 1120 on top, and now I think you can electronic file it with it and mail that in with the return. But Rev Prop 2013-30.
Okay. The next question is filing an S corp. Is it better than a LLC?
Well, here we go again. Now, remember what I said. Now, I get that question all the time, but remember what I said. When you file an LLC, you can choose how many ways you want to file it: partnership, corporation, or an S corporation. Remember, you have the LLC at the Secretary of State. You have the INC at the Secretary of State. You choose to say, I want my LLC to be taxed as a corporation. So your LLC is a S corporation. It's just being taxed as an S corporation. I get that question all the time. You have an LLC, but you ask for it to be taxed as a S corporation. It's the same thing.
Okay, thank you. Family members just inherited property in 2 different states. Where should they start as far as taxes and setting the land up for income purposes to rent out?
Well, of course, now, if you're in 2 separate states, sometimes you can look at which state offers the best tax advantage. If you got a family member in Florida, most people say, I want to be in Florida, you know, if I'm correct, no state income tax. I think a couple more states and stuff. But technically, it's where the state which you fear that you're going to do the most business out of now, okay? Now, always remember now, say if I set up in, say, Florida, or say I set up in North Carolina, but I want to do business in Arkansas. All I got to do is say, I'm going to structure my company in North Carolina because I'd rather have it here where I'm at. I like it for the fact that it's going to be governed under the rules of the state of North Carolina. But if I want to do business in Arkansas, then all I got to do is do a certificate of authority for a foreign entity to operate, foreign entity to be out of state entity to operate in the state of Arkansas or whatever state you're in. The rule to that is where do you, I tell most of my clients, where do you want to be recognized at? What state offer you the best legal protection? In regards to the state that you're in, I'd rather do it in North Carolina than South Carolina. I use that for example because I'm from South Carolina, but I work in North Carolina. I'd rather do it here because I like the rules better here. But whatever state you feel offer you the best benefits. But a lot of people come to me, do I need to do Delaware? Then no. If you're not Google, Microsoft, I'm not saying you need to do all that. But to the state that offers you maybe the best advantage. Florida, a lot of states don't offer sales tax, state taxes and stuff like that. Okay, but there's nothing wrong with the state you're in.
Okay, if you've missed the 75-day signing period, or, well, excuse me, what are the options to reconcile?
The option to reconcile right now is filing Rev Prop 2013-30. That's your best option if you miss it, if that's your intent. But remember now, if I said, and I did not know until right now that I was supposed to file 2533, but go ahead and do last year like a normal Schedule F and ask for recognition January 1st of this year, 2021. Okay, all right. So you don't have to go back. If you were operating, go ahead and finish that year out as a Schedule F. Be done with it. Income, expenses. Make sure you got your legal deductions in there, and start January 1st, 2020. If you find a day, say, look, I want mine to start 1/1/2021. Yes, you can say 1/1/2020, 1/1/2019, but I want to start now as an S corporation this year. Okay.
Okay, thank you, Mr. Tenney. Again, if you have any additional questions, please feel free to include them in the chat and we will follow up with you. At this time, I would like to thank you, Mr. Tenney, and we would like to allow Stefan some time to speak about
All right. Thank y'all so much. Thank you for the hope information was helpful to you today.
Yes, sir. Thank you so much.
Look forward to meeting everyone and doing it again. All
Yes.
right. Thank you. All right.
Okay, now we will have Stefan. If you're ready, you can do an introduction and start your presentation. I apologize for everyone for running over, but it was a great session.
I do apologize.
Stefan, you're on mute.
Okay, now you can hear me. Okay, I'm gonna start over. My name is Stephen Walker. I'm an extension associate here at the University of Arkansas at Pine Bluff in the small farm program. Pretty much I work directly with farmers, a lot of financial planning, loan applications. We go out in the field and take soil samples or tissue samples. It's like, we're like the one-stop shop. Not an attorney, not an accountant, but as far as just helping you with any agricultural paperwork, such as loan applications, USDA program applications, explaining the program, that's kind of like what I'm here for. I will come out in the field and look at things and make suggestions or bring a specialist with me. If it's NRCS, I'll bring a soil specialist. If it's irrigation, I'll try to find an irrigation specialist. Whatever your problem is, we will try to help you come to a solution to help you increase your production and your bottom line. So today I'm on to talk about financial management and loan applications. So I spend a lot of time doing loan applications, a whole lot of time doing loan applications. And up on the screen, I think I just put the FSA Farm Loan Program. All right. So the majority of the producers who come to me, we either do a direct FSA loan or we're doing a guaranteed FSA loan. So the direct loans, FSA lends you the money out of their money. It's at their interest rate and is according to their rules and regulations. If it's a guaranteed loan, then FSA is kind of like you're a co-signer. The bank actually makes the loan at the bank's interest rate, but the bank does have some rules and regulations they have to apply according to USDA FSA requirements. Okay, so the pots of money for a direct operating loan from FSA, the limit is $400,000. For a farm ownership loan from FSA, the direct limit is $600,000. And if you get a guaranteed loan, I'm not exactly what the limit is right now because I haven't looked at it this year, but it's like 1.75 million or something in that ballpark. So it's a lot of money, but it's at the bank. It's from the bank's interest rate, so it's going to be higher than the USDA. Okay, if on this website, Farm Service, you see you got emergency loans. The emergency loan is after a disaster year. A lot of people want to apply for emergency loans, but usually it'll work out better for you if you just get a regular direct loan. Every time I have filled out an emergency loan, the loan officers end up giving those producers a direct loan. The emergency loan is at a 3.75% interest rate. And like right now with FSA, the interest rate is direct operating interest rate 1.375 as of January 1st. Every month it changes, so you got to go to the website to see what the interest rate is. Okay, so farm loan servicing. Loan servicing or debt servicing is when the producer is delinquent on debt and he needs to get that debt restructured or what we call rescheduled. you might have an operating loan for 100,000 and you pay back in 80,000 and 20,000 is still outstanding. So to get that 20,000 out of delinquency and as a current debt, then we have to do loan servicing. And basically it's a way that we, you have to create a new farm plan, you have to do the projections on operating income and operating expenses. You have to show a positive gross income. Then the outstanding $20,000 debt will be spread out over a period of up to 15 years and make yearly payments, so the producer will be able to get that paid off and stay out of delinquency, and just get it done and keep operating. Okay. So we got emergency loans, we got loan servicing, but then we're gonna go to just the basic operating loan. In a basic operating loan, there are all of these, there's a lot of paperwork. Okay, so the USDA, right here, the application forms, 2001, request for loan assistance, 2001, financial, 3-year financial history is on your farm operation. Your sales, your income, which will be crop sales, livestock sales, milk sales, insurance proceeds, government payment program, government payments, any money that came into the farm operation. And then you have your expenses of your operation. So seed, chemical, fertilizer, labor, rent, land rent, equipment rent, even depreciation is on this list. So you have to have a 3-year history of that. Now, if you don't have a 3 years, you're a beginner, you don't have a 3-year history. It's really, you ain't got nothing to put on there. But hopefully, with the USDA FSA, they require you to have 1 year experience to get an operating loan. So that 1 year, I mean, the first year could have been real small. Main thing is you need records. You need to document what you do, when you did it, and what it costs to get it done. You need to keep good records to justify that you actually had a year experience. And another thing is, you need to certify, you need to go to the FSA program office and certify anything that you did. Like any crops you planted, you need to certify that you planted them. If you got livestock, you need to certify, I got livestock and I got this many acres of pasture or whatsoever. And that's a verification that you actually got that experience. So back to the paperwork for the loan. There's this 3-year financial, a 3-year production history record. So farmers need to keep these records regardless of whether they're applying for a loan or not. A lot of times they won't have it in any type of organized form. They'll have the numbers, but it's not organized. So they walk in here and give me the settlement sheets or give me the elevator tickets, and they want me to sit down and figure out what their average yield is for soybeans, the average yield for rice, and that when they should themselves. Working with producers, I spent a lot of time trying to decipher the paperwork that they had on the dashboard of their truck or they bring in here in a paper sack. We've been working hard trying to get these people to keep records. There are a few programs out there you could use if you're computer savvy, or even if you just do hand ledger. Writing things down is better than coming in here with a paper sack and want me to decipher it, because a lot of times I won't do it. Sometimes it will, depends on the individual. If I think they're capable of doing it, then you're gonna have to go back and do this and then come back when you got it done. If I know you can't do it, I will help you get it done. All right, so financial histories, production histories, there's some forms you sign just to give authorization to release information, run credit reports, and all those type of things. So that form is. The 3-year production history form, that's the front page. If you got crops, then that page, the second page is for crops. So you put in the crop, the unit, whether it's bushels or pounds or whatever, your total yield, the number of acres, and then you divide and give your average yield. It's pretty simple, but you know, a lot of people don't do it. Not that they can't do it, they just don't. They think I'm going to do it for them. All right. There is a creditor list. If you're farming, I'm quite sure you have creditors. If not, it makes your farm operation a little bit more difficult to manage. Credit with the seed companies, field company, equipment companies. You know, you need parts. Every time you go to the parts store, you got to either have some cash to write a check. You know, you need an account to where you just go get what you need. They send you the bill at the end of the month and you pay it. Even with seeds and chemicals and fertilizers, same thing. You need to have an account with a dealer you can make a phone call because you're in the field planting and you're out of seeds and you need some more. So you make a phone call and they bring them to you. And you just sign the ticket, or you might not even sign the ticket. They just bring them to you because you need them. When you got to pay for something every time you get it, it complicates matters. It slows down your operation. It is not convenient. So it's good to have accounts, credit accounts for your farm operation. Okay, so that's the creditor list. And there's a form for the property that you're farming. Who owns it? What's the location? Usually section, township, range would do on the description for the location, the owner's name on record, what county is, what the actual farm number is, and the acres. So they're concerned, do you have a written lease, is it an oral lease? Most nowadays, if you got a lease, it's in writing. Otherwise, you have nothing. Your crop share, even if it's a cash lease, it's 100%. If it's a share lease, it might be 80-20, it might be 25-75. So you got to put on here what type of lease you have and what the share arrangement is. And then the expiration date of the lease. Is it a 1-year lease, 3-year lease, 5-year lease? When does this lease expire? So again, with the USDA, there is a lot of paperwork and a lot of people get hung up because there's a lot of paperwork. Not that they don't have the information to put on the paperwork. It's just, they just bamboozled by the amount of paperwork that it is and not truly understand how to put stuff on the form. So Form 2037 is basically a balance sheet. You list all your assets, all your liabilities for the farm and for personal. Down at the bottom, the last section, I think it asks for personal information. A lot of people don't want to tell you about their houses. They don't want to tell you about their cars. They don't want to tell you about anything because they think and they know that it will be used as collateral against the loan. And that's what they don't want, especially their house that they live in. A lot of farmers like, I can't go home and tell my wife I put the house up so I can get a loan to farm. That will be having him sleep out in the garage or maybe sleep somewhere else. Then we have this Form 2038, which is a projection for income and expenses. So usually when a farmer walks into the office talking about a loan, I have a whole lot of questions before I ever get started. What type of operation you want to do? What kind of experience do you have? Do you have land available to farm? Do you have equipment? What do you have? What do you know? And what is it that we're going to be working with before I get off into this projection and income of income and expenses? So if it's beginners, I might talk with them for an hour or so before I ever put down a pencil, a number on a piece of paper. If it's an existing producer, then I want to know about your past history. What happened last year? Who do we owe? Did you pay out last year? Do you still owe on last year's operating loan? What was your yield? What were the crops? You know, all that type of information. Sometimes they already have that together. Most times they don't. So I give them the forms, explain them what I want and how to do it. And then you come back later and we'll go further. The projection on your income and expenses. We have a little form we call quick and dirty, to where when you tell me what crops you want to do, I can go to the University of Arkansas Extension website and pull up a budget for any crop, any commodity crop, and a few vegetable crops. And me and the producer will go through this enterprise budget, and we're gonna come up with what it's gonna take for this producer to produce this crop. I have found that my loan officers like for me to have one number for every crop. It's like, I used to send them in like, this producer here gonna produce soybeans for $2.97 a bushel, an acre. This producer gonna use $3.50 an acre. And they like, we're gonna use one number. And one number is what we're gonna use on every application. So I started having to stop doing that and just use that one number. Okay, so right now, soybeans, we're looking at somewhere around $3.25 an acre. Rice, about $6.50. If it's corn, it's gonna be at least $500, maybe $5.25 an acre. So that's how I'm gonna come up with a projection on the expense of producing the crop. Also, we have numbers for livestock, for cows. I ain't had nobody come in here for goats in a long time, or sheep, but cattle, I get cattle people all the time. Right, so we do these projections, we do the expenses. If you want to buy equipment, we factor that in. If you need to buy, if you want to buy cows, get started livestock operation, we got to buy the cows. That's just like buying a tractor. Is an intermediate asset, and it's something you're going to use to produce something else. So it's like buying equipment. So I help with all these projections, and we do the cash flows, and I got a calculator to do amortizations on equipment, on livestock, anything that's a term loan. I can come up with, put in the amount you're borrowing, put in the interest rate, put in how many years of the loan. It's going to give us a yearly note. So I spend a lot of time on this, but I also spend a lot of time trying on just keeping records. Seems not to go over real well because a lot of folks come in year after year, want me to do the same thing that we've been doing for the past 5 years, and they have not done anything, prepared anything ahead of time when they walk into the office. They just want me to do it all. As I get older, I refuse to do it all. You're going to go back and do this yourself and then come back, and we're going to help make sure that everything is in place before you submit this application to an FSA loan officer or to the bank. But you're going to have to help me help you. Kind of got to put my foot down on that one. Otherwise, it won't happen. So as you can see, the purpose of the loan, what can I buy? What can I do with this money? You can buy equipment. You can buy livestock. You can buy vegetable. You can go from row crop to vegetable crop, or from vegetable crop to row crop. You can purchase grain drying, storage equipment, value-added processing and marketing cooperatives. You can get shares in those. Feed, seed, chemicals, fertilizers, farm supplies, pesticides, herbicides. You can pay your cash rent. You can even get family living expenses. The living expenses thing. If you're a sole proprietor, you need to specify that you need money for family living. Don't just assume since I got this loan, I can just take money and spend on my household. That's not a very good thing to do, and the FSA loan officers don't like that. Nor do the bankers. Neither one of them like that, because they gave you money to produce the crop. Had you wanted or needed money to live off of, you should have told them you need to put some extra money in there for living. As a sole proprietor, you have to ask for it. If you're an entity, then most times, if your farm is an entity, then you could draw a salary from the farm. So that wouldn't be a problem. That's your family living. You actually work at this entity because the farm operation is not you. So the entity can pay you for working there. You can work as a manager. You could just work as a worker. But most times, operator, you're a managing member of the entity, and you can pay yourself a salary. And that keeps you out of a lot of trouble. Okay, repairs to buildings, repairs to your equipment and all those, and then you can make land improvements, conservation improvements. All right. Then you got loan closings, you got borrower training courses. Okay, UAPB, our program, the Small Farm Program, is one of the approved vendors for FSA borrower training. So we do borrower training courses. Before COVID, it was an in-person class, 2-day class. Now it's a virtual class for 2 days. But we do participate in the borrower training courses that is required for a FSA USDA loan borrower to complete. We do the training. Okay. Feel free to ask questions at any time. As far as the loan application, that's a direct loan, direct operating loan. There is a farm ownership loan, which is, the farm ownership loan is the one that has a $600,000 limit. Now for farm ownership, you have to have 3 years of farming experience to qualify for the loan. Another qualification, I forgot to mention it earlier, USDA is a lender of last resort. That pretty much means you can't get money anywhere else. In the past, you used to have to submit denial letters from commercial banks to qualify to get a loan with the USDA. They stopped that, but I think they started it back. I had a conversation with a loan officer a few months ago, and she had mentioned that either they started back or they're thinking about starting it back. The last few years have been very rough for our producers. There have a lot of loans that have not been, the obligation has not been completely paid back, so they have a lot of delinquent debts. And they kind of tightening up on the rules and regulations of this loan program. They tightened it up a lot. I was also told for the 2021 year, in order for a loan to get approved, the cash flow of the crop itself has to cover all debts. So in the past, we had government payments, you had crop insurance, you had other things in there that helped out with income, like the ARC, PLC payment. You might get some special payment later on because of disaster. Then you got the NRCS CSP, Conservation Security Program payment. And all of these payments added with your crop sales or your livestock sales to help you cash flow the operation. In 2021, if you're doing crops, the crop itself has the cash flow the whole loan, not counting these other income sources that come in. They really want the producers to start doing a better job of producing and kind of like paying these loans off. Is getting to be a problem. But, the weather, the nature, you just can't, ain't a whole lot you can do about it. You get your crop insurance, you get your NAP insurance, produce as well as you can possibly produce, and whatever happens at the end, that's what happened. And now we have to deal with it. We got to have some, it takes management. It takes good management, and that's where the older farmers who maybe have been through some of these situations before might come out a little better than beginning farmers, because of the fact that this ain't their first rodeo, and they rode out situations like this before, and they just make some better decisions overall than a younger person would do. But again, now we're talking about I was talking about the farm ownership. So the paperwork is exactly the same. I mean, all the forms are the same. It's just like you borrow money to buy land instead of borrowing money for operating. So they have an operating pot of money, which is the inputs for your crops and buying equipment and supplies. Then you have farm ownership land, which is for buying farmland. Okay? It takes 3 years of experience to qualify to apply for buying land. And that's 3 years of management experience, decision-making experience. I have people come in the door that have worked on somebody else's farm forever. It might be anywhere from a couple of hundred acres to several thousand acre farm. And they might be responsible for just one crop. You might be the rice person, you might be the soybean person. But if you can't prove that you were like given management responsibilities, then that's not considered experience. And just out of realistically, if you never operated a farm as the farm operator or manager and everything was your responsibility to make sure it happened, whether you actually did it or not, is different than just working on the farm. You know, you can work with somebody, they might have 20,000 acres, and you know everything that needs to be done, when it needs to be done, and how to do it. But unless you're the one that's responsible for making sure it gets done, you're the one signing the loan papers. You're the one who got to sit down and figure out what seed to plant. You're the one who got to work with the with your extension agent and all this and that to make a plan on how you're going to produce this year's crop. What you're going to do? What fertilizer are you going to use? What chemical program are you going to do? You have to make and provide, make sure that the supplies are there to go out in the field and do the work. It's different than just being a worker. Just go to the shop, get what you need to get, and go back out in the field and do it. Totally different. All right. So again, operating loans or farm ownership loans. And pretty much all the criteria is the same for the ownership loan. And then, I'm looking at a micro loan. The micro loan is if you need $50,000 or less. You might want to buy a piece of equipment. You just might need a few dollars to help you. You got equipment, but you need some money to help you get these crop in, maybe the seeds or something. But it's less than $50,000, $50,000 or less. If you already have existing loans, then you probably won't qualify for a microloan. Microloan is usually for somebody that has zero balance, lending balance with the USDA, and they just need to get something on a smaller scale. And that's where the $50,000 microloan comes in. It's less paperwork, is easier to process. Usually in a week or less, the operating loan paperwork is processed and approved or processed and denied. Mostly got to do with credit, I guess, if you get denied. But you have the operating loan to do something real quick for a small amount. All right. So a lot with loans. In the loan, they have these requirements, right? So eligibility is, then there's your general eligibility, then the farm management decision making. That all has to do with experience. But then also, they're going to do a credit check. The experience and the credit check are the first two things they're going to do. After 5 or 10 minutes of just talking with a producer, you can tell whether they have the experience or not. And then you run a credit report, and you can know whether they got good credit or not. And sometimes that could be as far as it goes. But if those two things check out, then we continue and finish the process. All right. Any questions so far? There's not a whole lot more to say about farm loans other than I will help you complete and assist you with completing the paperwork. When you come in and sit down with me, discuss everything. Not only are we going to talk about the farm loan, I'm going to ask you about soil samples, what the pH of your soil is, or do you know? If not, we need to go out and get samples. We're going to talk about seed varieties. We're going to talk about a whole lot of things before I ever complete this loan application. With a beginning farmer, we definitely need to discuss these things because some of these things the beginner has never thought about. With the existing farmers that have been in it for a long time, not so much because they already have probably doing a lot of this already. not only FSA programs what I discussed, but I also discussed NRCS programs like EQIP to help make land improvements, the cost share program, and then CSP, which is just a reward for being a good steward of the land. I think we have someone coming on after me that's going to talk about a lot of the NRCS programs. So, again, I will assist you with your financial planning. I can assist you in field operations, and we can come out and look at the crops. I can assist you and with pretty much anything you come in and ask for, you got a problem with. We'll start here by coming to me, and if I need to, I'll bring in those that specializes in a particular thing. I might bring in an NRCS employee. I might bring in an irrigation specialist from some irrigation company, or we call and talk to them. It could be whatever is needed. We're gonna try to get it done to help you out. Again, anybody got any questions about anything?
No, Stefan, I don't see any questions at this time,
Okay.
but thank you so much.
That's about the gist of my presentation. The loan, how to get a loan, what some of the requirements are going to be, and any other financial planning that you might need to do. You know, I will help you with financial planning, even if you're not trying to get a loan. You know, you just need to know. We'll sit down and we'll discuss it and figure it out, look at budgets, you know, do some projections and things like that, just so you know. There are many times I sit and spend time with the planning issues and they never submit the application. So that's what I do.
Thank you, Stefan. Could you share your contact information?
Okay, yeah, I'll put it down in. Okay, I sure will. I do it now.
And I think some of the takeaways from Stefan's presentation, make sure you do your record keeping. That is so important, basically for you, but also if you're planning to work with USDA, they will need to see your records. You need to develop a working history. Also, soil samples in the state of Arkansas, they are free of charge. You would just take them to the Cooperative Extension Service. If you have any questions, as Stefan mentioned that he could assist, there are other extension associates throughout Arkansas that would also be able to assist you. So now at this time, we're running a little ahead of time, but I would like to introduce Mr. Lavelle Foote. He is a retired district conservationist with Natural Resource Conservation Service. He serviced Jefferson County, and we are proud to have him on staff now with UAPB as a consultant, conservation consultant. So Mr. Foote, if you're on, we will transition it over to you.
Yes, good morning. I'm happy to hear it's been an excellent presentation so far. Many of the things that Stefan just got through speaking with you about, from a conservation standpoint, a number of the USDA programs can assist you with some of the conservation activities you have on your farm. And I've been asked this morning to kind of speak to you about a little bit about how some of those conservation activities can benefit you in your farming operations. I am a conservation consultant with UAPB, and I will come to your farm and assist you, but the main thing I would like to say to you today, many of you made applications back by the end of December the 18th of 2020 for the Environmental Quality Incentive Program we call for short EQIP. Many of the field offices within our CS today are getting ready to rank those applications and put together your final plans. It's very important that if you haven't recently provided them a list of conservation practices that you would like to have included into your conservation operation, it's very important that you follow up with those offices and kind of determine if they have all the practice needed in your operation that you would like to have in that contract. NRCS has a deadline to complete their ranking this year for 2020 of February the 19th. And they hope to have those contracts obligated by, I think is July, get it right, yeah, July the 16th of this year. And so as a result, it's very important that you include it. And some of the things that I've been asked to speak to you about was that there are a number of conservation practices, whether you're just looking to get some fencing, whether you went out and you just said, I wanted some land leveling. Those are mainly the structure practice that you want, but there are a number of management practices out there that you can get paid for. For instance, if you're doing things like row crop and you're willing to do what we call crop rotation, you can get paid for crop rotation as part of your conservation system, which also help your ranking to also help you get that application accepted for funding. Another one I would think would be if you're a row crop farmer and you're planning on doing cover crops. This year I noticed on the cost list, they've increased the cover crop payment from $66 to $74 an acre. If you're one of those farmers that's going to install cover crops into your operation, it will be very important that you make sure you get included this year. Normally, the average cover crop being installed on your farm costs anywhere between $35 to $40 an acre. NRCS this year is paying $74 an acre to help install that cover crop. Another thing is irrigation scheduling or irrigation water management is another one out there that I would strongly recommend that many of the farmers take advantage of and get a management practice cost payment on that. It also helps your rankings. And there's another one that we all need to take consideration of, and that is pest management. Pest management is a very important practice out there that NRCS pay up on. And for the average vegetable grower, especially crop grower, it could be very important. The payments could range anywhere from $35 all the way up to $150 an acre. It's very important that you consider those programs in your operations. One of the things is the practice they have on that list is normally hard for me to sit here today in 10 minutes and tell you about each and every practice. Again, my name is Lavelle Foots. I'm a consultant with UAPB. If anyone out there is needing help with their EQIP application, need any help in finalizing their conservation practices that they would like to have on that contract, I'll be happy to get with you, come to the farm, go over your operation, make recommendation what practice you might want to consider. Also, now I can also provide you the exact payment rate that they will be paying for the year of 2020. They just posted that up on their website. And so as a result, working through UAPB small programs like Stephen said, there is a number of us will be happy to come to your farms and assist you from a conservation standpoint. Make the recommendation of what conservation practice can assist you, and also to help inform you of maybe if there was a practice that you just didn't know about, that a lot of times we don't know all the practice. And just by you asking that question, maybe we can help provide that assistance to get that practice to you. So I didn't have much candidates at this time. I was told I had 10 minutes, so I know the time was very limited. But I'm here to answer any questions, also to make myself available to come to anyone that's out there needing assistance on their conservation operations. Again, my name is Lavelle Foot. My phone number is 870-692-7535. And also, you can also reach me by email at fulltime, FULLTIME 3128 @gmail.com. And if you have any issues that you need help on, please give me a call. I'll be happy to assist you with whatever your conservation needs may be. Kenny, that's all I have, unless you have some questions from some of the participants. I didn't set up program or anything? Because I knew the time is going to be very limited there.
Yes, sir. We do have a couple of questions or several questions for you.
Okay.
Does credit affect being able to be accepted into the NRCS programs?
Is what?
Does credit affect being able to be accepted into the NRCS programs?
Let me say this. Credit does not affect you being able to be accepted into the NRCS program. However, if you have some type of offset debt out there and you get a contract with NRCS, and they make a payment to you, there's a possibility that you have some type of bad debt out there. It can be pulled, just like if it was a child support payment or income tax payment from the state or federal government. Those payments can be pulled. Credit does not affect you in any way being eligible for the program. But the one thing I do want to stress, if you do have some debt out there that somebody can pull it from a debt offset, they can pull the payment that NRCS is making to you.
Okay, the next question, is there any conservation programs for landowners that don't really have time to farm?
It depends on the type of operation you have. If it's someone that has a program that wants to go into the forestry program, yes, because trees doesn't take that much attention once you establish them. However, the trees does take 25 to 50 years to grow up on that land to get a return from them. But if that is a program that you want to reestablish some timber back to forest land, yes. The other factor is pretty well farming. If you're into the pasture business and you're renting your land out, whether it be for hay or whether it be for row crop, the conservation programs are to improve the land and improve the production of the farmer to make the land more productive for the farmer to make a better livelihood upon the farm. It's hard to say if there is a practice that you can install and not be up on the land. Someone probably is going to have to farm the land to reap some kind of benefit.
Okay, thank you. The next question is, well, she's making a statement. Would like a link to where on the website the 2021 pay rates for various practices are posted. That's from Regine.
Okay, I can give it here, but also you may send me a link to my email. And for anyone that wants to go out to the Arkansas NRCS webpage, that website is www.ar.nrcs.usda.gov. Once you go to the Arkansas page for the NRCS office, you need to click on programs. Once clicking on programs, click on financial programs. And at that time, you will see all the different conservation programs that NRCS pays financial assistance on. The one you want to click on is the Environmental Quality Incentive Program, which is EQIP, we call for short. By clicking on that link, you will see a number of options, including clicking on the page where it has in blue, where it says current rate for the 2020 year. You will see the payment rates, the different programs, the different funding categories. Everything for the 2021 year has been posted at this time.
And we also have a request for you to type your information into the chat box.
Okay, I will be happy to do that.
Thank you for sharing the website with us.
I will do that too. I noticed someone just posted that.
Yes. That's again from Regine. Is there any other questions that you would like to ask Mr. Foote? If you ever need for him to come to your property, it is free of charge. He offers free technical assistance through some of the projects that we're working on. So if there are no other questions, I would like to ask Dr. English if he has a few words as we close our meeting for today.
Thank you, Candy. My phone would ring as soon as you call my name. It hadn't rung all morning, but as soon as you call my name, my cell phone started to ring. Okay. Just a few comments. I believe we have covered, excuse me just a minute. We've covered quite a bit, starting with credit. I thought we had an excellent presentation on credit. Anybody that wants to know about it, working with your credit, I think you can contact Ms. Pace and she can really help you out. Mr. Tenney did an excellent job on business structure. I guess and all that is critical. And Stephen Walker here at UAPB, I think he gave a thorough explanation of the USDA Farm Loan Program. Okay, so all that's been fine. I want to say generally, when it comes to raising the crop, you look at three main areas: financial, production, and marketing. And most people are real good at production. They don't do much on marketing, do very little on financial. Okay, and that's the most important part. Your operation must be economically feasible, okay, if you're going to a bank. It's got to be economically feasible, okay? And we have problems with that because people do not keep accurate records. And if you don't keep good records, well, your analysis is bad. Bad records mean a bad analysis. Good records mean a good analysis. I think Mr. Tenney stressed that. And with Stefan, if he's going to put together you a plan, I guess a business plan to take to a bank, if your records are bad, guess what type of plan he's going to put together? It's a terrible plan. It won't be realistic. Another thing about these plans, a lot of times we have farmers that come in with no records. That's tough. If you're a farmer and you say you have no records, don't go to FSA or go to a bank and tell them that. They will say you've been farming, you have no records. So it's critical that you have those records and use the Schedule F. And one other thing that we say, we come to these farmers, okay, and I'm going to address the crop farmer, etc. We have people to come in and you need to know what your yields are. You got soybeans. What is your yield history? Okay. Okay. Have you been making 20 bushels, acre, 30? We need to know that. And something you need to know. You need to know what the average yield is for your county. If the average yield in your county is 48 and you making 28, something wrong. Something wrong. Okay. You need to know that. Okay. I would say this for something wrong. And you heard Stefan talk about soil testing. Well, maybe he's right. Maybe you may need some lime. Okay, you may need some fertilizer. We don't know. Some things you should check on. Another thing I ask people to do is check your history. Okay, not only your yield history. What is your weed history? Have a bunch of weeds out there. If somebody's written you some land that's full of pig weeds and everything else, that's why your yield is low. If you're written land, do you want a field that's full of pigweed? Okay, you got to have a good herbicide program. Another thing that I tell people, a lot of time, was it wet out there when you were harvesting? In other words, is that land compacted? Compaction really affects the field. It affects the yield for more than 1 year. That may be a reason for yields being low. Okay, but again, you've got to know that your yields are low. We come in with a lot of people, they don't know they have low yields. They don't know that 35 bushels is low for soybean. That's low. Nobody makes that anymore, not the profitable farmers. But, these are things you know. Likewise, I would say with a cattle operation, okay, what is your weaning rate? What is your calving rate? These are some things you should know. You got to know that. We can help you some, but you should know what that weaning rate is. If your weaning rate is what, 75%, I think that may be that. That's sort of low. I mean, what, you're losing 25% of your crop. That hurts your cash flow, especially when you're dealing with a small operation, 20 cows or something like that. You lose 25% of that. There's not much margin left, I guess, to pay bills. So these are things that you got to know. So again, financial, the financial part is very, very important, but really it takes all three to be profitable. Now I would say this year for the row crop guys, they seem to, things seem to look good. Beans were 13, just about $14. Corn, $4. People's talking about 5. It's easy to make money this year. It seems like if these prices are maintained, But still, you need good yields. You need to work on your yields. You need to know what your yields are, know what the county averages are, so you can compare your yields with, compare your yields with the average. These are things that we need to know. And with that, I want to say, I want to echo what Stefan said. We are here to help you. We help people with USDA loans. We have an agreement with FSA where we work together with FSA. We generally help people who are dealing with USDA loans. A lot of times they are referred here to us by USDA, to come and help. But we will help you with that. But again, you need to have your records, good records. Your operation, we do have enterprise budgets that we can use, but the best plans for your operation will come from your records, not from an enterprise budget that we get from extension. It comes from your particular records. But we are here to help you put together, I guess, loan applications. And like Stefan said, if you just want to look at your operation financially, try to pick out the enterprise that are most profitable, we're here to help you with that also. We can do that. Another thing that we have going on right now, we're starting our Beginning Farmers program. If you know of beginning farmers that are interested, I have them to contact us. And that Beginning Farmers program is where we work with beginning farmers, I guess. We give them that extra assistance. We would come out and help them with their, with their financial plan, with their production plan, I guess, business structure. We give them, extra advice, and these are beginning farmers. There's some things like Stefan said, I had a beginning farmer to come in to see me the other day. He didn't know what type of soil he had, and we showed him that there was a soil app that you can put on your phone, and it tells you the type of soil. So a few days later, he texted me back. He showed me what type of soil he had. He had used the soil app. There are some things that we can help you with, and we want to definitely work with our beginning farmers to get them on that. And in that Beginning Farmers program, we will have a Beginning Farmers class like that. That class, we were hoping that class would be hands-on. Okay, that's why we haven't scheduled it as of yet, because of COVID. It sort of put a dent in our hands-on. So we will schedule that pretty soon. But the reason we haven't, like I said, because of COVID and the fact that it would have to be virtual, and we understand virtual, but in this class, it was designed to give you some hands-on, some hands-on experience. But we will have a class, and we'll be looking for people in that particular class. Mr. Foots was right here with you a few minutes ago. We have what we call a program awareness program, or I call it conservation program. Conservation awareness program. He's here to help us learn about these different conservation programs that are there to help us. And many times you can get income from these programs that will make your operation profitable. You get income for nutrient management, the soil testing, simple things like that. Cover crops. At one time you could get income for deep tillage, but that's no longer in there, okay? But there are some programs out there, and there's funds that you can get to help with your operation. Okay. So we do want you to take advantage of that particular program, and we will be having some more information about that program a little later. And with that, I'm going to turn it over to Miss Lee for any announcements and etc. Miss Lee.
All right. We want to thank everyone again for participating in our meeting today. We hope something has been presented to you that is beneficial. As always, with information, it is useless without application. So anything that has been presented that will help you be better, do better, it's going to take you actually implementing those changes that were presented to you. One thing to me that rang with everything was in the foundation of what you do. Going back to the basics, you need to be tracking everything, but you need to plan what you're doing before you start doing it. It's just like going on a road trip. While I know a lot of men just like to get behind the wheel and drive, actually knowing where you're going is beneficial for everyone in the vehicle. We just have a smoother ride when we know where we're going, as opposed to where we think we're going. So with the information that you have been presented with your credit, get your business in order, get your house in order, manage your things, and then keep up with them. If you're going into a business, I don't care how big, how small, structure your business the right way. If you don't know what to do, get in contact with the people that do know what to do so you can go forward. Again, success is in the planning. Long success is in the planning. So what you plan is quite crucial. And then you can step into those programs that are available out there because you have done what you should do. I met a young, well, he's deceased now, but a long time ago, he told me the best thing that he had was his name. He protected his name when it came to his credit. He did everything that he could to keep his credit. So he said he got to the point where he could just walk in the bank based upon the way he had carried himself financially. He could get a signature loan. They would just, whatever he asked for, because they knew he was trustworthy. So be that kind of individual. On February the 1st, we will have a Keeping It in the Family meeting, land and property rights. That meeting will be at 6 p.m. On February the 9th and 10th, we will have a vegetable production clinic. Those meetings will be at 8:30 each day. On February the 15th, we will have financial meeting where we will talk with people from USDA, from NRCS, FSA, rural development, dealing with housing, and we will also be talking with crop insurance and insurance people because we have some deadlines that are coming up in February. And then on February the 22nd, we're going to have a Tracing Your Family Tree and Arkansas Squatters and Adverse Possession Law meeting, and that will be at 6 p.m. So please stay involved, stay up with us. We will be announcing everything. All these meetings will be via Zoom. All of them are to help you be better stewards of whatever it is that you have been giving. Thank you. Thank you very much for your participation. I did record this meeting. It is going to take some time, especially because of the length, for it to convert. And so once it is converted, I will then send it to our communications individual, and then he'll do some tidying up. So if you put your email address in there, in the chat box, I can give you a copy of that, or you can respond to the flyer and send information, send a request to me directly, and then I can get you this information. But it won't be right when this meeting ends because it takes some time to do that. Again, thank you everyone for participating, and we hope that you have a very, very wonderful day. Thank you.